Mortgage rates jumped more than a quarter of a point this week and remained at their highest level in 14 years, with no relief for foreclosed home buyers. The average 30-year fixed mortgage rate increased to 6.29% from 6.02% last week, according to Freddie Mac, the highest point since the last week of October 2008. The rate is more than 3 percentage points higher than at the start of 2008. Rates are 3 percentage points higher than at the beginning of the year. For buyers watching their paychecks shrink because of higher prices, and shopping budgets shrink because of rising rates, today's housing market remains very unlikely, said George Ratio. The jump in the 30-year rate came as the Federal Reserve reiterated its firm commitment to curb rising prices on Wednesday after raising short-term interest rates by 0.75 of a point as expected. These actions will cause the mortgage interest rate to continue to rise until inflation shows signs of a more significant moderation, Ratio wrote. Since mortgage rates began their rapid rise in March, buyers have been pouring out. The volume of applications for mortgages for purchases fell by 30% from year to year, according to the latest data from the Mortgage Bankers Association, although activity recorded a small seasonally adjusted increase of 1% week to week. About 11% of homes for sale saw price reductions last month, Realtor.com data showed, up 19.4% year over year and close to the average from 2017 to 2019. Fewer homes sold above list price in August, according to a separate Redfin study, with 35% selling above the asking price, a decrease of 49% from a year ago. That's some relief for buyers still in the market, Sheldon said, who are using their new bargaining power to get price reductions that offset the recent price increase. Everyone pays points, so closing costs are no longer 2% to 2.5% of the purchase price, they are 3% to 3.5%. This is additional money they need to bring to the table to get the